Thanks to our friends at the Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. All right, Netflix has been through a lot over the last year. Maybe investors have changed how they think about this company. So I wanted to talk about this and sort of figure out where we think Netflix is going. And to do that, I brought on Jon Quast. Jon, why don't you start by laying the groundwork of what do you think about Netflix today? This has been the dominant streaming company over the last, it's been more than a decade. They sort of invented the streaming TV business, but they've really hit an interesting wall in 2022 after being a pandemic darling. They're kind of hitting some headwinds. So what's going on with Netflix right now?
So the stock had a very bad year. It may have started back in 2021, but when the company reported its first ever decline in subscribers. And so it reached a peak of well over 200 million. And it showed a couple of quarters where that actually went backwards. Back to growth now, but all in all, what this is saying to the market is, does Netflix still have growth in front of it? And the market is starting to say, no, they've kind of reached the plateau of what they are able to attract as far as a user base. Now, over the years, Netflix has been very averse to having ads on their platform. And founder Reed Hastings says, I believe his exact words are, he likes the cleanliness of a subscription. It's just a subscription. There's nothing more to it. It's very clean, nice, tidy. He doesn't want to muddy it up with ads. However, saying if this is something that our customers want, we should give it to them. So dropping the price on the subscription, but you also then have to watch ads. And the idea is hopefully they'll make up in revenue in ads what the difference is, and it'll just be a wash for the company. But the benefit is they can actually then have more users, people who were not going to pay what a subscription cost. They'll pay for less, and the ads will make up the difference. The problem is that really what was holding new subscriber growth back? And I would make the argument based on a lot of things that I had read that no, this isn't necessarily what is holding people back from a Netflix subscription. It's not the price. It's not the fact that there's not an ad option. And recent data actually supporting this. And so the Wall Street Journal, I believe, is reporting that in the most recent month, only 9% of new signups for Netflix coming from people who are taking that ad tier. Now, there are a lot of people taking the ad tier, but the majority of them are people who had a subscription and are now trading down to a cheaper option that also has ads. Now, is that okay? Long term, it's probably a wash. So they probably will get to a point where they're making,
And you're talking about just from a financial perspective.
Yeah, I don't remember what the exact numbers are, but let's say that a Netflix subscription is $15 a month. The ad is $10. They're hoping to make $5 in ad revenue.
I've got it right here. So here are the plans for Netflix right now as it stands in late December. You can get basic with ads. That's $6.99 a month. There is one supported device at a time, and you can watch in HD. The comparison would be to basic, which is $3 more expensive, $9.99 a month. And that has ad freeze, and you can download on devices, on one device at a time as well. That's the other added benefit to that one. Standard then goes up to $15.49 a month. That gets two devices to download, and premium is 4 devices and 4 devices to download. Also gets you Ultra HD, whatever that is, must be 4K. So I think a lot of people are paying $20 a month right now for Netflix, and the one ad tier option that they have is $7 a month, but that's just for one device. So maybe not a product that fits everybody's needs, but yeah, it is starting to get out there. But I agree that the challenge is, the thing was funny when they announced this ad tier was that you could tell they hadn't really thought it all through. They didn't even announce like an ad partner yet, because they don't have an ad sales team. They don't have the infrastructure like a media business like Disney does, or like Paramount does. So they're not going to build all that stuff themselves and launch it in 6 months. They did do a really good job getting that out the door really quickly, but I think it's Microsoft that's actually doing the ads.
Microsoft, yeah.
So that's another thing to to add in there, I want to ask about the ads piece is really interesting, but when I look at this pricing, we're now getting to the point, I think I'm on the $20 a month plan. And that's now a significant chunk of money that I'm paying for Netflix. And so as we have new products come out, there's Disney, there's HBO, there's Paramount, there's Apple TV, there's a ton of different streaming services. And if you get all of them, suddenly you're paying way more than cable and you're getting less content. So where do you think they sit in that group of companies? Because I think one of my criticisms of Netflix has, for a long time, has been they're not actually great at making content, at least not consistently great at making content. It's like they're throwing a whole bunch of stuff at the wall and hoping that something will stick, and then hoping that the algorithm will kind of figure out the rest and like feed stuff to me that I'm going to care about. But there's very few shows that I want to keep my Netflix subscription for. I mostly keep it for the kids. Whereas what I'm watching more and more is, the HBOs and the Disneys, the kind of more curated TV, the studios that I know when I turn something on from them, it's going to be a certain level of quality, maybe more tentpole, Marvel-y, Star Wars-y kind of content that's you're not going to hit the same home run as you can with like a Squid Games, but it's consistent. So where do you think they're sitting as far as that content game goes? Because I think that's another challenge they're facing this year.
I think that Netflix is in the completely wrong place for capturing value for shareholders at this point. And here's what I mean. Mm-hmm. You mentioned the content. You mentioned the Squid Game. Let's say that all Netflix does is crank out hit after hit after hit. That doesn't really do anything from a profit and loss perspective, right? Because it's a subscription. I can watch as much or as little as I want for, $20 a month? And if I don't use it at all, I still pay that $20. Okay, so the only real goal that Netflix has is getting me to subscribe and stay subscribed. The quality of the content is kind of an afterthought in that. They can do a really good job or a really poor job. It doesn't really matter so long as I'm still subscribed. Now, obviously, the better the content, the higher the chances that I am subscribed and staying. But my point here is it's something that happens. It's a continuous need for the business is to generate this content to keep me there. How good it is actually neither here nor there, but the point is they're still spending, and they have to keep spending every single month, and they do. They spend an exorbitant amount just to maintain the value proposition that they have, or to maintain that value that they're capturing. Now, you stop spending on content. Let's say that you spend $100 million, $100 billion this year on content, and it's the best content in the world. If I don't spend more money next week to make more content, I lose my subscribers. Now, all of a sudden, the treadmill, I've fallen off the treadmill because I stopped moving my legs. So when you look at something like a Roku, it doesn't matter. And not that I am all bullish on Roku. There are issues with Roku, but I'm saying that it is in the right spot for capturing value. And what I mean is it doesn't matter what I watch on Roku, whether I'm watching an ad-supported Disney Plus or I'm watching something on the Roku channel, which isn't even their content most of the time. It's old content that people are like, I guess we'll put it on the Roku channel so that we can get some people to watch it and get some ad revenue. It's better than sitting in a vault. And Roku's like, okay, this costs us nothing to make. It doesn't matter what I watch on Roku. So long as I'm watching on Roku something, they're generating money from ads. So that's a very different part of the value proposition than where Netflix sits. Also, the advertising technology. I think that it's great that Netflix is joining the ad space for the advertising technology companies. So there is a lot of value to be captured there, because now all of a sudden we have over 200 million people being thrown into this potential monetization pool. And if you're an advertising technology company, this is gold now to be part of this advertising and growing your opportunity by that amount. But if you're Netflix, all you're trying to do is keep the treadmill running to me, they're just not in a great place. I would say that Disney is kind of in that same place, except they have the iconic 100-year-old, 60-year-old characters that just aren't going away. They don't necessarily have to make new content every single day for Star Wars to stay absolutely front and center in the public opinion. So whereas Netflix doesn't quite have that iconicness.
Yeah, I want to frame exactly what you're saying in maybe a little bit different way, and that's to say, how would you depreciate a piece of content on Netflix versus how would you depreciate a piece of content that Disney makes?
Yeah.
And my argument would be, like, even Netflix's best content, Squid Games is a great example. Okay, that's arguably the biggest home run that they can hit. It is almost worthless 3 months later. Nobody is signing up for Squid Games 3 months after it's produced. So how much value is that adding to you as a business? Well, now you as an investor have to go, okay, they're spending, I forget the numbers off the top of my head, but let's say $30 billion a year on content. The revenue is $30 billion a year. Well, now they're not making any money. I'm going to get my numbers a little bit wrong there, but
the way to look
but I think the way that we've always looked at these companies is, you create content, but it's going to be there for the next 30 years. So you're going to be generating value from it for the next 30 years. But if you're not creating content that is going to generate value for the next 30 years, the way that Disney does, right? Like, look at everything that is on the Disney Channel, right? Like you have the little box that says, I'm going to watch a Pixar show. This is one of the last 20 movies that Pixar has made, and you can watch it over and over again. We both got kids. I mean, my kids are watching the same 5 movies over and over again, and they're all Disney movies.
Yeah.
Same thing with Star Wars, right? They're repurposing the same content for adults that was created 40 years ago. That's what they do really well. That's what the new Time Warner is doing as well. The other way to think about this, so you can think about it on a depreciation basis. The other way you can think about it is with what's called the smiling curve. So with the smiling curve, the vertical axis is value generation. So you want to be high on the value generation side. On the left axis is niche content. The right axis is like this tentpole content. So Star Wars, Marvel, where you want to be either creating something niche that people are really, really find valuable and that they will subscribe to your service, or they will pay for the content, they'll go to a movie theater, or you want to create this content that everyone can identify with, that's maybe a little bland, but you can release Avatar, and even though it's disappointing, it still did $180 million or whatever it was in opening weekend. Because where you don't want to be is in the middle. And I think that's the problem, is that Netflix for too long has been in the middle, where people aren't passionate about it because it's a niche, and they're not passionate about it because it's something everyone has seen. And so it kind of leaves you in this stuck position. The other thing that I want to bring to the table is the ways that they can monetize their content. Disney has the movie theater. They have streaming. They have TV networks. They have theme parks. They have toys. They have stores. There are 100 ways that you could be paying Disney money over the next year if you have kids, particularly if you have kids, but adults too. Netflix, they get my $20 a month, but that's the end of our relationship.
Yeah.
So I think that's another challenge for Netflix.
Indeed. And I'm not saying that it doesn't make sense, the value it's created up to this point. I am saying I do struggle to say where does the value capture come from here, because of where they sit in their market and where they're already at. Where does it go from here? And I personally don't see it as a current iteration of Netflix. Either you cut back on your content spend and somehow still retain the users. Either you acquire another player in the space, whether it be advertising technology or whether it be a Roku, for example, and you move to a different part of that value stream, or you become part of a larger conglomerate. So like I don't know, a theme park company in some way. Maybe it makes sense as part of Comcast. I don't know, but I don't see where the value creation comes from Netflix at this iteration.
They're spending projected $18 billion on content in 2022. That's up from about $7 billion in 2016. I think I'm going to throw out a couple of crazy ideas. One thing is that eventually we will see sports move to streaming. Who better to do that than Netflix? That they, I think, still have the biggest audience. Disney's numbers, when you add all of their services together, are technically more, but there's a lot of overlap there. So from unique users, I think Netflix is still bigger. They could do some really interesting things there, but they would have to change the way that they do them, right? Like if I'm paying $20 a month, if they said, hey, Travis, you could pay another $20 a month, and now you get access to all NFL games and all NBA games, or whatever the deals they can strike are, that becomes really compelling to me. Now you're replacing cable for the sports watcher. The problem is I don't think that they would ever do that because they've never been interested in sports. They got into video games. That it makes even less sense to me because it's just such a different medium. So that's sort of what I question. But I agree with you that I think the end game here might be Netflix being folded into another bigger conglomerate. I think Comcast makes sense because they own NBC Universal. I wonder if you even split off NBC Universal and say, hey, we're going to merge in the content unit of Comcast with Netflix to make another new Disney, and that's the way that things go. And then you kind of have three major content companies with the Time Warner and Disney and that NBC Universal Netflix combination. I think that would make a lot of sense. And then, Comcast, the cable company, can just focus on that instead of sort of making enemies and with certain partners that it needs to have in the content business. So yeah, I think strategically and financially, Netflix is in a much tougher position than a lot of people thought it would be. And growth has papered over a lot of these challenges that have been sort of festering for a long time. And it wasn't until, things like coming out of the recession have weird impacts. Mm-hmm. Suddenly you look at your bank statement and you go, my goodness, I'm paying $100 a month for streaming. What can I cut? Am I going to cut Disney? Am I going to cut my cable? I don't know. We pay for YouTube TV so that I can watch some sports. Am I going to cut Paramount? Am I going to cut Netflix? Which one of those goes to the top of the list for things that you're going to cut? And I think Netflix is at the top for a lot of people, and that's what we saw in 2022. So that's a unique change, and these are things, if you haven't thought about how much value this content spend is going to generate over a long period of time, maybe start thinking about that if you're an investor. How are you going to add more revenue sources if you're Netflix? Start thinking about that if you're an investor. Can they add theme parks? That's a massive spend. Mm-hmm. Disney has been spending 50 years building theme parks and figuring that business out. It's a profitable business, but it's tough. So there are a lot of questions. Any final thoughts before we close up here, John?
The only thing that I would add is I'm not predicting the demise of Netflix by any means. I say that Netflix continues in operations for a very long time. My question is, can this stock beat the market from where it trades today based on the current iteration of the business? And I don't see where that is going to come from. So that's all I'm saying here. I'm not predicting the end of Netflix by any means.
Yeah, I'll second that. And, maybe a great outcome for investors will be a buyout at a premium and everybody walks away happy. That's very possible too. So what are your thoughts on the future of Netflix? We'd love to hear from you in the comment section below. Please follow or subscribe to Rive Investing. I appreciate it. Give this video a like and share it, with anybody who has thoughts about Netflix, because I think this is going to be an interesting company in 2023. Thanks for watching, and we'll see you here next time.